Welcome to At One Go Financial Podcast. At One Go Financial is your personal financial education channel. Today we're diving deep into a pretty significant development in global trade, the newly announced Trump tariffs. You've shared a collection of information with us from sources like MarketWatch, the Wall Street Journal, Al Jazeera, and well, our goal today is really to extract what you need to know about this and how it might affect, your financial outlook.
Absolutely. And we've pulled together info from a really broad range of places: the White House, Investors.com, Kiplinger, Reuters, the whole gamut. The idea is to give you a comprehensive but, focused view of these changes. Cut through the noise, really.
Exactly. So in this deep dive, we'll look at the specifics of these tariffs, the thinking behind them, the potential ripple effects for the global economy and certain industries, the chance of other countries maybe hitting back, and some first thoughts on how you, as an investor, might want to think about all this. So let's get right into it. What exactly was announced?
Okay, so on April 2nd, 2025, President Trump announced a set of really sweeping tariffs. The first bunch actually takes effect super quickly, April 5th, and then the rest follow on April 9th. They're calling the whole initiative Liberation Day.
Liberation Day. Okay. And it sounds like this isn't just a minor tweak. We're talking big tariffs on a lot of stuff, right?
Oh, absolutely. There's a baseline 10% tariff that applies to all goods imported into the United States. Just think about that. Everything. Electronics, clothes, you name it. That's the floor.
Wow. Okay. 10% on everything coming in. That's already pretty significant. But then you mentioned there are also these higher country-specific tariffs. Why those?
Right. So these extra tariffs are aimed specifically at countries where the U.S. imports way more than it exports to them. Countries with substantial trade surpluses with the U.S. The administration's argument is that this directly addresses what they see as, well, an imbalance in those specific trading relationships.
Got it. And we have the numbers here. China gets hit with an additional 34% on top of the 20% they already had. That's huge.
It really is. Then you've got the European Union facing 20%, Japan 24%, Taiwan 32%, South Korea 25%, India 26%, and some really high ones for Southeast Asia: Vietnam at 46%, Thailand at 36%, Indonesia and Malaysia both at 24%. Even the UK and Australia get a 10% tariff.
That list really shows it's targeted, doesn't it? The percentages seem linked to how big that trade surplus is. Oh, and you also mentioned a separate 25% tariff just on foreign-made cars.
That's right. A flat 25% on all foreign vehicles, no matter where they're from. That's another layer on top of any country-specific tariffs that might apply to other goods from that same country.
Okay, so these are pretty hefty measures. What's the core justification? What's the administration's why behind Liberation Day?
Well, the main line is that it's a response to what they're calling a national emergency caused by these persistent trade deficits. The stated goals are pretty clear: boost domestic production, get more stuff made here in America, create American jobs, and generate revenue. We say this revenue could go towards tax cuts and paying down the national debt.
So the strategy is basically to make imports more expensive, hoping that makes American-made goods look more attractive, leveling the playing field as they frame it.
Exactly. That's the stated aim: make U.S. businesses and workers more competitive.
But these kinds of big announcements usually shake things up in the markets, right? What were the immediate reactions?
Oh, definitely. Right after the announcement, U.S. stock futures dropped about 4%. That shows some immediate investor anxiety. And we saw some big names take a hit in pre-market trading. Apple and Tesla were both down around 7%.
Likely worried about supply chains and maybe international sales.
Yeah, increased costs for parts sourced globally, potential impacts on selling their products abroad. That's likely the thinking there.
And it wasn't just U.S. markets reacting, I assume.
No, not at all. Asian markets felt it too. Hong Kong's Hang Seng Index fell by 2%. Singapore's market dropped about 0.5%. It shows that broader worry about what this means for global trade flows and, overall economic growth.
And for places like the EU, now looking at a 20% tariff on goods going to the U.S., what are the specific worries over there?
Well, some sources are definitely raising concerns about a potential recession in the EU. The U.S. is a huge market for them. Slapping a 20% tariff on their exports could really hurt their economic activity. It just highlights how linked everything is globally.
It really does. And thinking closer to home, one obvious consequence for consumers here could be,
well, higher prices, right?
That's a very real possibility, yeah.
Yeah.
If imported goods cost more for businesses to bring in, they're likely to pass at least some of that cost onto the consumer. So you could see inflation tick up, and your money might not stretch quite as far.
So while the goal might be boosting U.S. industry, the immediate hit could be on our wallets. Are there other wider economic risks people are talking about? Yes, definitely. There's a worry that this kind of uncertainty could make international companies hesitant to invest, maybe pull back on plans. And of
Yeah.
course, the big risk is retaliation. If other countries impose their own tariffs on U.S. goods, that could really slow down global economic growth overall.
Okay, let's drill down into specific sectors. We mentioned tech and autos. Which other areas might feel a particularly strong impact?
Well, countries that rely heavily on manufacturing exports, think China, Vietnam, Thailand, which got hit with some of the highest tariffs, they could see a real slowdown. Their economies depend a lot on selling manufactured goods to places like the U.S.
And that 25% auto tariff seems like it's aimed squarely at some major car exporting nations.
Absolutely. Japan, South Korea, the EU manufacturers there send a lot of cars to the U.S. market. That 25% cost increase is going to be a big challenge for their competitiveness and profitability here.
And for those giant tech companies like Apple, it's not just about the finished iPhone they might import, is it? It's the whole chain.
Exactly. It's much more complex. They source components from all over the place, assemble products in different countries. These tariffs could hit the cost of many of those individual parts, driving up the total cost to make the product. That either means higher prices for us, or the company has to absorb the cost, hitting their profits.
Makes sense. Now, understandably, these tariffs haven't exactly been welcomed everywhere. We're hearing talk about retaliation. What's the latest vibe on that?
Yeah, several countries are definitely weighing their options. China has already said pretty clearly that it will take, quote, necessary actions to protect its interests. That definitely raises the specter of a tit-for-tat trade war, which nobody really wants.
Right, that kind of escalation could make things much worse economically. What about the EU?
The EU has expressed strong opposition. They're looking at proportional responses. That likely means identifying U.S. exports they can target with their own tariffs, hoping to pressure the U.S. administration.
And even close allies aren't happy. I saw something about Australia.
Yeah, Australia's prime minister came out saying the tariffs are unjustified and could damage the relationship. He specifically mentioned concerns about their beef exports to the U.S. being harmed.
So it's a really tangled web of potential reactions and counterreactions. Okay, let's pivot. For individuals for listening, how should we maybe think about our own investments amidst all this uncertainty?
Well, in times like these, diversification becomes even more important. It might be smart to look at your portfolio. Are you maybe too heavily concentrated in areas that could be hit hard? Like, say, U.S. stocks with huge international sales, or economies really dependent on those manufacturing exports. Spreading risk is key.
Okay, diversification. What about maybe focusing more on companies that do most of their business right here in the U.S.?
That's a potential strategy, yeah. Companies with primarily domestic operations, less tangled up in global trade, might be somewhat more insulated from these specific tariff impacts. It's something to consider.
And we saw real estate investment trusts, REITs, mentioned in the sources. Why might they be relevant now?
Right. REITs, particularly those holding domestic properties that generate rental income, can sometimes offer a more stable income stream. When the broader market is choppy because of economic uncertainty like this, that potential stability can look pretty attractive to some investors.
And the traditional safe havens, gold, bonds.
Yeah, definitely worth keeping an eye on those. Gold, U.S. government bonds, they often attract money when investors get nervous about economic turbulence or geopolitical risk. They're generally seen as lower risk.
So it sounds like the big takeaway for listeners, for investors, is stay informed, be cautious, and maybe revisit that diversification strategy as we see how all this actually plays out.
Exactly. These things take time to ripple through the system. We won't know the full effects immediately. So staying updated, understanding the potential impacts, and being ready to adjust your approach is really crucial right now.
So as we can see, this Liberation Day plan has definitely kicked off a complex chain reaction. From the immediate market nervousness to these longer-term questions about inflation, how industries might shift, international relations, there's a lot to track. The key point is these changes could really have broad implications for your investments and just the overall economic picture.
It really underscores how interconnected everything is, doesn't it? A policy decision here can echo across the globe and land right back in your financial life.
It certainly does. Well, thank you for joining us for this deep dive into the Trump tariffs. At One Go Financial is here to guide you on the path to financial independence, helping you understand and navigate developments just like these.